Ladies and gentlemen, I'm speaking to you as an American who's been watching this story unfold very closely. If you've followed our coverage on the silver surge, then you already know something isn't right. You know, the price mechanism is broken. You know, the Shanghai arbitrage is flashing red. You know, the banks are cornered. But right now, I want you to look away from the ticker. Stop refreshing the silver price every few seconds, because that number on the screen isn't the truth. It's just a symptom of a financial system that's slowly falling apart. As we move straight toward 2026, there's only one question that truly matters. Not what silver is trading at today, but whether Samsung's leaked 9-minute charging battery technology is about to completely rewrite the silver market. And I'm going to be very clear with you from the start. The answer is yes. For years, mainstream tech analysts have sold you a carefully crafted story. These are the same voices that pushed lithium fantasies and endless EV hype. They told you silver was irrelevant, just a minor ingredient that didn't really matter. They said lithium and cobalt were the real kings, and that future battery technology would leave silver behind. That story was never true. It was designed to distract you, to keep you on the sidelines while the real shift was happening, quietly. Today, that illusion ends. Using Samsung's own leaked information, industry data, and insider signals stretching from Seoul to Silicon Valley, we're going to break this down piece by piece. We'll look at what a 9-minute charging breakthrough actually means in the real world. We'll explain why the so-called battery revolution simply collapses without silver as we approach 2026. And most importantly, we'll walk through the exact price levels silver is pushed toward when this technology collides with an already fragile global supply. This isn't just another tech update. This is a turning point with massive financial consequences, especially for American wealth. So let's clear out the noise. Let's talk about the real energy reset that's taking shape right now and why Samsung's silver battery leak could be the trigger that sends silver to $150 and beyond. Many people see silver touching $71 and immediately think they're too late. They call it a bubble. They believe the opportunity is gone. But that reaction comes from reading the chart the wrong way. What we're seeing isn't a bubble forming. It's the collapse of a reverse bubble that's existed for decades. Silver was held down artificially for a very long time. In fact, it was the only major asset on the planet that was cheaper in 2020 than it was back in 1980. While gold has been printing new highs in nearly every currency since late 2023, silver spent years lagging behind. It only recently managed to reclaim its 2011 highs when measured in Swiss francs. And here's the reality as we head toward 2026. Silver isn't ahead of itself. It's behind.
It has years of catching up left to do, and it still hasn't reclaimed its inflation-adjusted highs. And let me be clear. I'm not talking about the sanitized CPI numbers the government puts out. I'm talking about real inflation, the kind you feel in your daily life. When you adjust silver's 1980 high for actual inflation, not manipulated math, silver doesn't belong at $71. It belongs closer to $800 an ounce. Now add Samsung's battery technology into that equation, and suddenly $150 isn't extreme at all. It's conservative. So when you see silver trading at $71 today, understand what you're really looking at. This isn't excess. This is silver finally crawling back toward fair value. The move from $50 to $71 wasn't speculation or mania. It was a long overdue correction to reality. Samsung didn't casually leak their solid-state battery specs for attention. They leaked them because they ran the numbers. They saw where EV adoption was heading. They saw what that meant for silver demand. And they realized the supply simply wasn't there. That leak surfaced in August 2024 when silver was still sitting below $30. We said by back then, now we're at $71. And the move isn't finished. But focusing only on price misses the real story. To understand what's happening, you have to understand energy. This is the core argument skeptics love to use. They claim silver doesn't really matter for EVs, that it's just a basic conductor. That argument collapses under scrutiny. Silver isn't just conductive. It's the transaction metal of battery technology. When you price the world in silver instead of dollars, the truth becomes impossible to ignore. Take Samsung's solid-state battery, the benchmark for modern EV performance. The first leak in 2024 pointed to a 600-mile range. By 2025, it was production-ready, slightly more expensive in nominal terms, but delivering nearly double the energy density. Measured in dollars, the price went up and the consumer got poorer. But measured in silver, something incredible happened. Since the leak, the cost of a Samsung battery has dropped by 85% when priced in silver and by 78% when priced in gold. That's not a rounding error. That's a paradigm shift. What this means is simple. While the dollar-based beer has to work more hours to afford new technology, the silver holder can now buy multiple batteries for the same amount of metal they owned before the leak. This proves something critical. Precious metals don't just protect you from inflation. They allow you to capture technological progress. They let you benefit from innovation instead of having it stolen from you through currency debasement. But batteries alone aren't the real issue. They're just gadgets. What actually matters is the vehicles on the road. Everywhere you look, people complain about EV charging times. They say it's impractical, that the grid can't handle it, that the entire EV sector is a bubble. And if you measure it in dollars, they're not wrong. In fiat terms, it looks distorted and fragile. But in real money, EVs aren't in a bubble. They're in a depression. We went back and ran the numbers all the way to 2010. From 2010 to 2020, the average EV battery in the United States cost about 457 ounces of silver. That was the norm. Today, even with silver surging and real battery costs barely moving, the price of a typical EV battery has collapsed to just 95 ounces of silver. What we're witnessing right now is a 53% collapse in the real cost of energy since 2020. And it's still falling. At 95 ounces of silver, EV batteries are now cheaper than they were back in 2010. That's a historic low. When you look at the same data through gold, the message doesn't change. The median battery price measured in gold is sliding towards $6,000 for 100 ounces, the exact local bottom we saw in 2011. So think about what that means for two very different people. If you're holding dollars in a savings account and hoping to buy an EV someday, you're running up a down escalator. Every month, the battery becomes more expensive in dollar terms. But if you're saving in silver or gold, the opposite is happening. The battery is getting cheaper by the day. This is why the allocation decision heading into 2026 matters so much. You're not accumulating metal just to admire it. You're positioning yourself for a future where a modest stack of silver can be exchanged for a 600-mile EV fully paid off. That transfer of wealth isn't theoretical. It's happening right now. The dollar price of energy keeps rising. The silver price of energy keeps falling. And the widening gap between those two curves is exactly where the next generation of energy winners is being created. To understand why Samsung's leak shook the entire industry, you have to look at the technology itself. This solid-state battery isn't a minor upgrade. It's a complete break from the past. The August 2020 leak described a prototype capable of charging to 80% in just 9 minutes, faster than most people can get through a drive-thru. And at the center of that breakthrough is silver, not a little, but a lot of it. Traditional lithium-ion batteries rely on graphite anodes. Solid-state designs replace that with silver to achieve higher conductivity, greater stability, and longer life. Industry reports suggest each battery pack could require up to 1 kilogram of silver, roughly 35 ounces. Now scale that up. Samsung plans to produce 10 million of these packs in 2026. That alone translates into 350 million ounces of silver demand, more than an entire year of global mine supply. That's not speculation. That's simple arithmetic. And Samsung isn't alone. Companies like BYD, Toyota, and major Chinese manufacturers are racing toward the same technology, all competing for the same finite silver supply. This is exactly why the U.S. Geological Survey added silver to its critical minerals list in 2024. They saw the battery surge coming, and they knew new supply wouldn't be able to keep up. The impact goes even further. These batteries aren't just fast. They're safer with no liquid electrolytes to leak or explode, and they're designed to last up to 20 years. Once this tech proves itself at scale, every major automaker, from Tesla in Texas to Ford in Michigan, will be forced to adopt it. And when that happens, silver demand won't trickle in. It will be pulled in violently, like a vacuum in a dust storm. Global EV sales crossed 20 million units in 2025. If even 10% of those vehicles switch to solid-state batteries, that's another 70 million ounces of silver disappearing almost overnight. And the story doesn't stop with EVs. Artificial intelligence data centers, the backbone of the AI revolution, are adding another huge layer of demand. Cooling these massive facilities requires silver, pushing an additional 100 million ounces by 2030. Deficits. They go nuclear. This is exactly why dealers are freezing purchases, premiums are skyrocketing, and comex is deep in backwardation. Physical silver is literally vanishing before our eyes. The implications for Americans are staggering. Tesla, GM, Ford, our homegrown EV giants are all moving toward solid-state batteries. Tesla's Cybertruck already consumes twice as much silver as a conventional gas car. If Samsung's technology hits mass production in 2026, every US EV will require 5 to 10 times more silver than before, adding $50 to $100 per vehicle in production costs. That alone is billions in additional demand, right from American factories. The Inflation Reduction Act is pumping $370 billion into green energy, solar panels, wind turbines, all relying on silver paste for efficiency. California's solar mandates could alone consume 40 million ounces of silver in 2026. But there's a catch. Shortages could slow EV production in Michigan, hiking prices for American drivers by 10 to 20%. Jobs may boom in Nevada mines, but smaller refiners in Ohio could get squeezed, widening economic inequality like the Grand Canyon. Corruption whispers creep in. There are already rumors of insider deals with Samsung, locking up U.S. mine output and leaving retail investors on the sidelines. Now add U.S. debt to the mix. With $35 trillion on the books, the Fed is printing, inflation hovers around 3%, and silver remains one of the few reliable hedges. But Samsung's looming demand could push silver to $150, potentially outpacing gold itself. And as history teaches us, bull markets breed scams. Fake silver batteries are already popping up on eBay, targeting unsuspecting EV enthusiasts in Florida. The echoes of the 1970s oil crisis are clear. Then, silver quadrupled on energy demand. Today, the EV revolution is poised to do the same. The ripple effects on markets are intense. U.S. silver miners like Hecla surged to 100%. But battery shortages could also crush tech stocks. Tesla, for example, could dip 15% temporarily. Geopolitics adds pressure. China's export restrictions on silver starting January 1, 2026 could cut U.S. supply by 15%, forcing Samsung to hoard from American mines. Let's break down the tech again. Samsung's solid-state battery uses silver anodes to achieve 50% higher energy density. Prototypes indicate up to 10,000 HL double traditional lithium-ion efficiency, with 20 million EVs sold globally each year, requiring 5 ounces more silver per vehicle. Industrial demand spikes massively. At AI servers with a 15% yearly silver increase in U.S. hubs, and total industrial usage is on record growth, heading towards 68 ounces per unit, expanding 5% annually to 2031. Investors are reacting. SLV ETFs see $5 billion inflows, but physical premiums at U.S. dealers have jumped 20%. Meanwhile, crypto adds a twist. Tokenized silver on U.S. exchanges like Coinbase offers some hedge against shortages, but introduces niche inequality. Tech giants are hoarding, while everyday Americans pay more for EVs. Lobbying slows regulatory relief, the EPA delays mines, and the weak dollar feeds a perfect storm. Healthcare demand, silver jewelry, and industrial investment are all climbing simultaneously, reinforcing that this isn't just a metal story, it's the center of the next American wealth and tech revolution. The global silver market is shifting fast, and China's export restrictions are sending ripples through U.S. prices. Yet, American industrial demand continues to drive nearly half of the market. Analysts warn that if demand reaches 150 ounces in 2026, silver prices could spike 100%. Predictions vary. CPM sees $135 as optimistic, while ING suggests $155 as a more conservative but still high estimate. Why the wide range? It's simple math. Cumulative deficits totaling over 1 billion ounces are creating a black hole of demand, with silver vanishing into the tech revolution. The August 2020 for Samsung leak is a perfect case study. Back then, silver sat around $30. Today, it's $71. That rally wasn't random, it was a direct consequence of real-world demand for advanced battery tech. Everyday Americans feel the pressure too. EVs in LA and beyond are greener but costlier, widening inequality. Mining states see some benefits, but smaller operations get squeezed, and rumors of insider deals with Samsung surface, reminding us how fiat money and metals play out in power struggles. Looking ahead, $150 per ounce is a real possibility. Miners could boom, but overmining and production cycles can create crashes too. Analysts debate risks and timing. Tech delays could send silver down 20%, while substitutes like copper could temporarily ease pressure. Still, structural shifts in EV adoption, ongoing deficits, and the battery revolution make $150 realistic if supply constraints persist. Even in a mild recession with a 2% GDP drop, the long-term silver story remains strong. We're also seeing corporate tech giants hoard silver, quietly controlling future supply. These hidden moves extend power far beyond 2025 specifics. Meanwhile, global debt at $35 trillion signals systemic risk, echoing the post-2008 environment and adding weight to silver's safe haven appeal. Tax rules matter too. Any silver sales above $1,200 are reportable, and storage strategies, whether at home or in bank boxes, are part of smart planning. For everyday Americans, dollar cost averaging and a 5 to 10% allocation in silver can provide a hedge against volatility in the S&P and broader markets. Geopolitical tensions like potential U.S. sanctions on Korea, environmental regulations, and supply chain disruptions all add layers of complexity. Optimists like Schiff tie silver's upside to battery explosions and tech adoption, while cautious voices warn of substitutes and delays reducing near-term demand. The broader picture is clear. Silver is no longer just an underdog. It's a central player in the energy and tech revolution. It's the hero of a story where gold is the sidekick and fiat dollars risk losing value amidst endless printing, policy mandates, and market volatility. The next few years will determine whether silver reaches $150, stabilizes around $120, or dips toward $50 if unforeseen delays hit the battery rollout. In the meantime, smart investors are watching deficits, industrial demand, and geopolitical developments closely. Understanding that the metal's value is about more than dollars, it's about participation in the next era of technological and economic transformation.
Mine closures in Montana due to new EPA regulations are already shaking the market. Couple that with the possibility of the Fed hiking rates again if inflation rebounds, and you could see silver dip in the short term. Even with these challenges, bull catalysts remain. The U.S. infrastructure bill is pumping billions into EV funds, supporting demand. On the flip side, consumer slowdowns are hitting EV sales in Michigan, showing how sensitive this market is to domestic trends. Look closer, and you'll see a national chain reaction. Nevada's mines feed California's EV hubs, which in turn fuel demand across the country. The window to position yourself is closing fast. Think about what happened with the Samsung 9-minute charge leak. Dealers sold out almost immediately, limits were hit, and premiums spiked. That was just a tremor of a warning before the real earthquake. Right now, if you search, you can still find metal. You can still trade paper dollars for silver, even at high premiums. But a day is coming, maybe next week, maybe next month, when that will no longer be possible. Dealers will be empty, mints will be closed, the buy button will be grayed out. And on that day, people will be divided into two groups, those who acted and those who didn't. Don't be the person calling me 6 months from now asking, where can I buy silver? I won't be able to help. Nobody will. You have the knowledge, the targets, and the warning. What you need now is courage. It takes courage to go against the herd. Courage to convert your safe savings account into a heavy metal bar that pays no interest. Courage to act as your own central bank. But take a look around. Consider the debt, the wars, the lies. Do you really feel safe relying on their system? Or would you rather hold the only asset that has survived every empire, every war, every collapse for over 5,000 years? The choice is yours, but it must be made now. Get your house in order. Secure your silver. Protect your future before circumstances decide it for you. We at Mint Access thank you for being part of this movement. Remember to like and subscribe. And if this message resonates, share it. Wake up your family. Wake up your friends. We are building a lifeboat, and there is still room, but the tide is rising fast.